21st of September 2012. Well, as you can see, I made a mistake, and lost 125 pips. And if you look at, I'm going to cash the price, and then I'm going for a long and try to offset the previous contract, and I put 2 contracts in now. Sometimes when you look at a slower chart, like faster chart like a 6 range bar, you might find that, oh, if I'm going to cash the price at this level, might sort of like too far, it might not retrace that much. But sometimes if you do that, you go back to a longer period of chart, and you see, oh, it's not that far. You can always catch it. It's just one level down. So it's always good to look at different chart when you place an order. Particularly if you look at a faster chart, it won't retrace that much. But if you look at a slower chart, it won't look like as bad. See that? It's only a little bit there. Another thing that I want to point out is, say if you had made a mistake on direction, a lot of people might consider, oh, it doesn't matter, I'm going to wait until it will come down to offset my contract. But it's not a good idea. You got to change direction if the trend is not in your side. If the trend is go against your side, then this is what I would do. I would forget about the previous mistake and then start trading like just offset the previous contract and jump into the new trend. Don't wait for it to come back to your original order price. It won't come back. Right, so it's only about like 8 points. So might as well, if you can see that it's sort of losing a little bit momentum, move a little bit, catch it there, catch it there.
Order filled.
So let's fill the order. So at least you got in. I'm going to put a stop there. Then you try for a second go. If you believe the trend is still going up, but if you make a mistake and you head it to the wrong direction, doesn't matter. You can always do a short, at this point and regain the gap which you have missed it. Look at a faster chart, look like, oh, well, it looks like a downtrend to me. Yeah, but have a look at a different chart. Look at a 12 range bar. It's still pretty much look like an uptrend still. Yeah. Basically, what you need is you need a good discipline when you get in. Always automatically set yourself a stop.
Order pending. Order filled. Order pending. Order filled. Order pending. Order filled. Order cancelled.
So just catch that low point again, the pivot, a new pivot again, and I have a very tight stop again. I've just make 2 trades. One trade is now from there to there within this sector there, and then exit just before the green lines, and then I re-enter the market at 207.90. So I'm going to mark a stop, a safety tag there now at 91. So that's cover the commissions. So the next exit, I will sort of leave it a bit like further rather than the same point at the same point at 2,800. I would expect we'll go past that one. So I'll just leave a trading stop now this time, or else it will be a return going back down. So it is stupid not to set a stop, somewhere, not to set an exit point there, because you won't expect like the price to go up like rockets. There'll be retracement somewhere. You got to catch a trend. You can't sort of like just work on just one trade for the whole day. Is stupid and risky. I mean, nothing is totally correct, but this is a sort of way that I apply. So I'm going to move up my stop at that point. So after the retracement, that went past the resistance level there. Emergent, that will be the next supporting level there. So I move up my stop a little bit further up, just below the supporting line. If it's went past it, doesn't matter. Let it went past it. I find that a lot of people are just lazy. They just set a stop there and let the price go up and down, and they're not catching the wave. They're not catching the pivot. They're not catching the trend. So this is what I believe this is a way to maximize your profit, because sometimes the up and downs could be just like 100 points. So this is one of the way I use making use of the support resistance level. And nothing is automatic. As a trader, you got to work. You got to keep checking on the market. You got to keep checking on the price action. That is another sort of 20 pips, compared to the first trade, another 16 pip there. So so altogether, so the first trade we're talking about from here to there. So it's 18 pips. So the second trade so far, it's from here to there, assuming we're going to get out now. So it's 23 pips. Rather than just making just one set of from here to there for 30 pips. So you gain extra, how many pips? 18, 11 pips so far. So I'm going to move up a target again, move up the stop again, and I would presume I got to exit at some point around there.
Order pending.
So it's like 2 points away, one points away my target, yeah. So because just now I didn't actually look at the screen, therefore I missed it. Otherwise I would just exit at that point. So it doesn't matter. If you look at this structure, you can just leave the sell there, because next time if it sort of retrace upward, it will come down. So today open at open high. This is why I lost 100 pips, at 20740, and then I stopped the previous contract, as I mentioned earlier on. Do not hold on to it, because as you can see, the market actually went up rather than going down. So if you expect the price will go back to the break-even point, it's quite difficult actually. I'm not saying that there isn't any chance, but it's very difficult. So you're better off to get rid of the contract and then to work the way back, to do a few more trades to make up the losses. So this is what I did. The name of the game is to maintain your flexibility. And guess the only thing that you can control is your capital. You cannot control the market. So if you know that you're losing X amount of dollars, then what you should do is you should sort of find a way to regain it, and not sitting there and wait for it. So afternoon open, it sort of opened sort of with some kind of momentum there. So I set a
order filled
at that point. So I got a tie stop there, you know, which is a put, which is a short contract. We've got a very tight stop there, and I'm catching a knife there because that was support line. So if it's go past it, I only lose a few pips, you know. Have a look, chart trader. Okay, this is a stop. It's a very tight stop. I would expect, you know, if it's go past, then it will keep going up to 29. So I would expect, you know, like moving the stop at 43. So give you a sort of like 20 plus points, you know, stop. And I would expect to have a target this time somewhere there.
order pending
And I'm going to put a safety tag there just to make sure that, you know, it won't go past my order, my entry point. So if I lose it, then I lose it, doesn't matter. You have to think about, if you lose 100 points, 100 pips, all you need is 10 winning trade, and each trade all you need is 10 pips, and you can totally recover, rather than sitting there and wait for the market, you know, run into your expected side. That is harder, actually. Just busted my stop, but I didn't lose anything because I put a safety tag on it. So you've got to believe the trend. If you believe there's an uptrend, then find a way to see the breakthrough there. It's go past that line then, so it might stand a very good chance to heading upwards. So I'll leave the buy stop signal there, just in case, sort of, you know, coming down, and I would sort of get into the market from that point. Particularly at this stop time, the market just opened, so give it a bit of time for it to adjust.